Hey everyone, it's Tom Crowds with another Rockstar Minute. As real estate investors, we always talk here at Rockstar that the biggest threat to all of us would be a sudden rise in interest rates. And we're always watching interest rates, especially if you have variable rates, you're thinking about locking in, and any moves in interest rates is ultimately one of the biggest variables that you can't really control. So you need to study the economy and think about it a lot. But this got us thinking. We talked about amongst ourselves this Monday at our Monday team meeting, and we said, hey, look, has there ever been a time where interest rates were really high and property prices continued to go up? And we kind of all dismissed it and assumed there wasn't. But obviously there is this one big massive example of exactly that. I'm going to put a chart up here from ratehub.ca. It's a historical chart of interest rates. And if you look between like the late 1970s right until the early 1990s, interest rates were well above 10%. In the early 80s, mortgages were at like 16, 17, 18%. And now if I put up another chart and we look over at what happened to the Toronto real estate prices when interest rates were that high, I'm going to put up some historical Toronto Real Estate Board data. And if you look from the late 1970s, the average sale price column, and you look all the way down to 1990, you can see that even though interest rates were above 10% for that entire period, property prices continued to go up that whole time. And there's a number of reasons for this that we have to kind of analyze. And one of them was the baby boomers that generation was really entering the workforce in the 1970s. They were starting to buy houses and borrow money, and borrowing money obviously drives the price of real estate. So that was happening. There were also unions that were much stronger back then that really held income levels at a much stronger level. And I don't think unions really are as prevalent now and can do that. So we don't have the same things that are happened back then that are happening here in the year 2018. So when we go forward, I'm not sure the same thing would happen if interest rates went up to like 8, 9%. Would we continue to get property prices to go up unless there's a shock? And one of the main reasons for stagflation during this period was that there was an oil price shock in the 1970s that really drove inflation. So for some reason, during the next financial correction, recession, whatever it is, we had some inflationary shock like that. Maybe we do hit an environment where we have high interest rate prices and hard assets continue to rise like they did in the past because of inflation. Anyway, just something to think about. We don't have all the answers, but we like looking back and trying to learn from it. Until next time, your life, your terms.